This roundtable from Bridging Commercial will discuss why we need to bring more brokers into the bridging market and how the industry plans on doing this. We will look at how distribution has changed in this particular market over the past few years and what it may look like in the years ahead. In addition, we will also discuss why it is so important in the current economic climate for brokers to be aware of bridging finance and its uses. Richard Tugwell, Group Intermediary Relationship Director at Together, will be joined by Ranjiv Kumar, Partner at Watson Farley & Williams. Also in attendance will be 4 specialist finance brokers: Sam Norris at Bond Finance Limited, Harpreet Chadha at Noble Life, Liz Sims at Connect Mortgages, and James Chisnell at City Finance Brokers. So, Richard, if you want to kick us off, how do you think distribution has changed in the bridging market in recent years?
I think it's become more specialised as a product than it was previously. I think we could certainly do with more people in the market understanding what bridging is. So I think the market's changing slightly, but it's probably still ingrained in where it was a few years ago. And if anything, the volumes stabilised or started to stagnate slightly. And I think to get that moving, we probably need more people into that market.
I think I'm in agreement that it hasn't changed a great deal, although I am seeing more individual brokers getting interested in the market and learning a little bit more. I think for the majority of the networks, mine excluded clearly, it is perceived as a higher risk product, and they would rather stay in the mainstream products, the areas that they know well and carry less risk. And that's the educational piece, if you like, that we need to get across to the brokers so that they're not as frightened of it. The networks are not as frightened of it, and that will hopefully then that would help to grow the numbers of brokers that have a bit of interest in it now, but are still treading the water a bit.
I think that's right. I think it's not just educating brokers, it is really educating the large networks and those with influence within them to see that this is a necessary product in a number of circumstances and not to be afraid of it. That it's even if it's unregulated, when it's not always, regulated bridging is there and is a very useful product and is going to become more and more popular. And there are large networks out there that still won't allow their brokers to deal in that side of the business.
Scared of it.
They are.
Yeah.
They're very scared of it, and it's really unnecessary.
It's also viewed as being complicated, and actually it's not.
Yeah.
The loan and the security documents that go together for a bridge loan are very similar to other documents and other finance transactions, and actually can be put together very quickly as well. I think the market perception is not in kilter with the actual reality.
And one thing we haven't mentioned as well, which is a glaring difference between bridging and the main market, is actually understanding how that funding is going to be repaid. And I think a lot of the time, and I probably would hold my hands up and say when I first got into this, I didn't understand how integral the exit strategy was. But now, almost, you kind of reverse engineer these kind of cases, and you ensure that there is a way of that funder getting their money back before really going for it with the full application.
The responsibility of building their knowledge is actually on the advisor themselves, and I totally accept the market's very, very specialist, but it's really important for me that my brokers have a generic understanding of all of those areas, so when a client calls, they can hold a conversation that's confident, gather some information, even if it's not their specialist area, they can identify an opportunity and then pass that on to somebody else to work with if it's not their area.
Because there is so much onus on the exit in bridging, is there a benefit to mortgage brokers going into the bridging market because they've already understand that market and they know what's on offer rather than a broker that only deals with specialist finance?
Yeah, absolutely, because they can look and see those alternatives for that exit, and maybe a pure bridging broker has got the equal and opposite problem of maybe understanding the bridging market but actually not having the depth of knowledge to work out some of the extra options that may be available for exit, particularly if you're doing things like exiting within 6 months of the original purchase, for example. Still speak to brokers who say, well, that can't be done. When you think about some of the things that are coming in terms of technology, there's lots of talk about actually eventually all of that vanilla stuff that is their core may well go direct to lender or through a technology route. So that leaves you with the specialist market.
The market is demanding that those type of things are offered. If they can't get it through a certain network, they'll get it through a different one. So I think market demands will start to put that upon them. And a lot of it is down to this myth busting again, that the reason they won't open it up is they're worried that people don't know how to give the advice on that and will be straying into areas they don't understand. and we can only help that by bringing that understanding to the market.
And it's an education to the network as well, because it's still almost a dirty word to most networks, from what I can gather. And so, you know, I have ex-colleagues in other companies who are appointed representatives, and they have to give it away to a packager, which is bizarre.
Because it's non-regulated though, I think some of them might be surprised in the number of brokers that are still actually processing it, because that's the quirk of this particular part of the market, is there are lots of non-regulated bridge lenders who will accept business from brokers without an FCA number, because they don't, from an FCA point of view, have to, which is very different from the buy-to-let market, which is still in the main not regulated, but it's very rare to be able to do a buy-to-let with a lender unless you do have an FCA permission, either, you know, consumer credit or even full regulated permission.
And when I've gone around the clubs and networks, that's one of their big stumbling blocks, where we're not really sure what our advisors are going to advise on if we open it up to everyone. And I think that understanding, whether that's as far as getting some type of standard, whether there's some type of exam or some type of qualification that says I am a kite-marked bridging introducer and I deal with these lenders that also have the same standards, I think is an interesting debate, because that may be the only way it really raises itself up.
I think networks might be dictated to, you'd be able to clear this up maybe, networks being dictated to by the PI providers in some respects.
My PI provider, you know, who's looked after me for many, many years, you know, understands the depth of non-regulated business we do, because, you know, the amount of the figure that I put on my PI form for non-regulated versus regulated is much, much bigger.
I think if you went to a PI provider and said that my guys don't know what they're doing, but I'm going to let them do it anyway, then it's going to be a difficult one, isn't it? I think if you can show what you've done and what steps you've taken to ensure that you're giving the right framework for advice, and also you're dealing with lenders that can look after your clients when you send them that way, then that's going to be an easier sell into the PI provider.
And I think the question we talk about how we get more brokers into the specialist market, I think really the question is that it's a quality over quantity debate, and having 100 new brokers enter the market tomorrow is going to have a detrimental effect if those brokers don't know what they're doing.
It's pretty much how our careers have evolved to this point. Absolutely. You look at brokers, you know, typically you start off either in a bank or sitting in an estate agency on a salary, and then you start moving out, and then really your individual client bank follows you. So a 25-year-old fresh broker is going to be doing more resi buy-to-let. And then as they get older and their client bank stays with them, and then they come to their 40s and 50s, then the clients are starting to take more of an entrepreneurial view, which will maybe lead to more complex stuff. I don't think someone can just come straight into the market, into complex stuff.
Yeah, I disagree.
Oh,
really? Because we do such a lot of specialists compared to residential, the vast majority of our brokers are those that have come from the commercial markets and have not done residential. And so we actually see a completely different thing from those brokers who have gone into a specialist market.
Is there an understanding as a broker of what questions you need to ask a lender if you haven't used them before? Would someone ask, what do you do with a client that's gone past exit? Or do you think, no, that one fits, I'll put that in? Yeah, where's that basic standard, I suppose, that gives you an entry into that lender or not?
I'm using a smaller bridging lender or something, always, it's essential to know where the funding's coming from, because you don't know if it's going to be there next week.
We've had a few occasions, actually just a handful actually, where the funding has been withdrawn without any reason. And then we've had to scramble around to get something else in. And I think that's probably, from an external perspective, the view of the market is that it's still relatively complicated, quite opaque, and there's no minimum standard, and a very variable quality of product. And I think this goes to the education and training piece, and in terms of knowing what's in the market and how to approach it, and also just developing a toolkit of options to give to clients and so on. Often it seems as though maybe brokers are just going to a lender who is happy to lend quickly, and maybe not thinking about the client's wider interest.
And we talked about why clubs and networks are nervous about going to the market. Well, there's a reason. So if they knew that there were lenders out there that had a standard and their brokers were only using those type of lenders,